What's going on, guys? Welcome back. Today is January 3rd. I hope you guys had a lovely New Year's. I hope you guys find profitability, and those that are already profitable, I hope you guys continue to find success in your trading journeys. Today's video, I'm going to go over today's breakdown. Today was a pretty challenging day, I would say. The market was all over the place. I was able to find two entries, one during Asia and one during the PM session. All right, so let's go over that analysis and let's get straight to it. These videos are meant for educational purposes only. Any trades taken in the financial markets are under your own discretion. The information taught should be demoed and only taken to live accounts under your own responsibility. E is profitable, will not be held liable for anything you do with the information presented. All right, guys, so I'm looking at the daily. That's where I normally start, is on the daily. And I'm going to mark some one of the levels that I was looking at. I was actually looking at that daily high. I had that marked there. This daily candle obviously wasn't there. This Tuesday candle wasn't fully developed yet. So I had that daily candle marked. And yeah, I wanted to see price since on Thursday we saw this bullish candle day, and then on Friday it was an inside day. I was hoping to see price continue up and take out that daily high, so that's what I had marked. All right, so let's take a look at the 4-hour time frame. All right, so on the 4-hour time frame, I had this 4-hour volume imbalance marked. Anytime I see anything like that, I like to mark that and see how price reacts to that volume imbalance. So I have that one marked. So then I went to the 1 hour. All right, so on the 1 hour, this is what I'm looking at. This was Friday, right? And then this was Tuesday's price action when it opened. So when price opened on Tuesday, you can see right here that there was another volume imbalance. So I had that one marked as well. All right, so let's go to the 15-minute, and this is where we're at. So on the 15-minute, let me back up a little bit. So we see that price took out sell side liquidity here, right? So we can go ahead and mark this little area here, the sell side liquidity, right? So we see that price took out sell side liquidity. Boom. Price then started to break up, so we can kind of see like a break of structure to the upside, right? We can see that. Boom. This was a retracement, right? So that was between Thursday and Friday. We can see that this was a retracement. So then what I was expecting was for price to come back up here to take out this buy side liquidity, and then continue to come up to take out buy side liquidity that was sitting up here. When the market opened, it opened with this big candle here to the upside. So it immediately took out this buy side liquidity, right? But the way I was looking at it, I said, okay, market took out that buy side liquidity. A lot of people are going to think that this was like the top, and they're going to look to short this to write it down. So on the 15-minute time frame, I started to look at different PD arrays to see what was within this range. I noticed that we had this 15-minute order block. So I had that one marked. I also had the 15-minute imbalance up here. So I was looking for price to come down to these areas here so that I can look for an entry. There was another 15-minute imbalance down here, so I did have that one marked as well. Price could potentially come all the way down here. Now, the way I had this marked, I had this marked like I was first originally looking at it from down here to up here. you know, as far as like a premium and a discount. But then I decided to look at it from here because this was the move before that expansion, right? So it kind of like it went up, it dropped some, and then it expanded. So that's how I was looking. So I was looking to get in somewhere below the 50% equilibrium. So anything in the green would have been an area for me to look for an entry. All right. So visually, I knew that it was either going to be this 15-minute imbalance or this 15-minute order block where I was going to look for an entry. Once it tapped into this 15-minute order block, I was able to find a better entry and I got in on some buys. So what I did was I got in around here. My stop loss was at the bottom of the 15-minute order block. And then I would have normally set my TP up here, but I set it at the top of the candle right there, not at the wick. And I went to sleep. So I set up my TP right there. And I just, went to sleep, and with the confidence that I knew that price would most likely come back up. One of the other reasons why I felt that way was because we have this volume imbalance. And normally when you see a volume imbalance, you're going to notice where price runs through it once and then it needs to run through it again. You know what I'm saying? So the volume imbalance was created, price ran through it, and then normally price will run through it again to balance that volume imbalance. So I had those three things to my advantage. First of all, I had the fact that the market was breaking to the upside. Number one, I was looking at this like a retracement. Number two, once it broke higher one more time, I knew that a lot of people were most likely going to look for sales. So I like to do the opposite. I also had that daily imbalance up there that I was hoping price would reach up to. So again, once I saw that price came down into a discounted area, it got into this 15-minute order block, and I got in on some buys with my TP sitting here. So that went through lovely. That was a perfect play. And you can see here a screenshot of that trade that I got into that was perfect. So I then wake up and I see that price reaches up towards that daily high, but as you can see, it never quite took it. So, and today there was medium impact news. So let's go down to the 5-minute time frame. On the 5-minute time frame, one thing that you want to notice too, right here. Okay, so we're on the 5-minute time frame. You can see where price, right, went above that area. But if you compare that to these other charts, this one is the S&P 500. You can see that price did not, and then this one is US 30. And you can see that price did not. So that's an SMT. See, price on the NASDAQ, it took out that high. S&P, it failed. And the Dow Jones, it failed as well. So that was a good indicator that price would potentially go bearish. So I noticed that immediately. Now let's go back to this screen over here. All right, so once price did that, so again for NASDAQ, it did take out this short-term high. I went down to the 1-minute time frame. All right, so you had a few opportunities to get in here. We can see where price took out that short-term high and then it started to break down. You could have marked right here as market structure. And what you want to do, and this is a small tip that I'm giving you guys, what you want to do is you want to mark these market structures. And if price breaks through that market structure and it also leaves a fair value gap, that is your entry. So you notice price took out that market structure, created a fair value gap. That is your entry. Anytime you see that, you can find another entry. So for example, right here we have market structure again. You run it across. Price broke through that market structure, leaving a fair value gap. This could have been another entry. You see how it taps into the fair value gap, not as much as this one, but it did get into it. That could have been another entry, right? So, and that's, again, you can do that with any time frame. On the 1 minute, it'll be a little bit more complicated, but as you go higher, it can be a little bit easier for you to see that. So for example, right here, we see where market broke through this short-term low, and it left what? A fair value gap as well. That could have been another entry. You see how price tapped right into it, right? So what you'll find oftentimes is that if you go to a higher time frame, you can find some really good entries if you pay attention to how price reacts when it breaks through when it breaks through structure. So for example here, right, you see where the market broke through structure, and then it also left behind this fair value gap. You see how that was an entry. You have another one up here that you could have also entered on. Your stop loss should always be on the candle below that created that fair value gap. And if you start to analyze these markets, you'll realize that a lot of times where there is a market structure, if a fair value gap was left behind, that is a perfect way for you to enter. So look at a quick example here again. You see how, boom, market structure was broken, a fair value gap was left behind, and that was a good entry. All right, and you'll find that in a bunch of different places, but let's go back to what we were talking about. All right, so that could have been your entry there. This could have been an entry there. You could have had another entry there. All right, so then what happened during lunch? The market kind of consolidated a little bit. And then I looked for an entry when price started to come up here. What I wanted to see was for price to take out these lows one more time. There were also a daily low that was sitting somewhere below here. I don't have it marked. So I started to look at the levels, and I noticed that we had this order block, 5-minute order block. So I had that marked. I went into the 1 minute. And I started to pay attention to reaction, the way the market was reacting. If you notice, they created like a false support, like a retail support, right? So anytime I see stuff like that, I like to mark it. So once the price came up and it took out this short-term liquidity right here, I started to look to see what would happen next, and I saw that the market broke down. It left behind this fair value gap, and that's where I entered on some sales. All right, then we can see where the market created another fair value gap right here. So I was just paying attention to all that. So it was a quick play. It was a scalp. I got in on some sales here, and then I closed my positions as soon as market broke through here. And I actually uploaded a video showing you the live trade, that live trade. But that was my thought process. You know, I know that a lot of times when the market is running bearish, a lot like how it was here, a lot of traders have the tendency to look to buy because they want to catch the bottom. And what you'll find is that most times the market will start retracing up like that, giving you the illusion that you caught the bottom and it's about to turn back bullish, but then it crashes down. And that's what I was actually looking for here, but I didn't quite get it. I was still able to make some pretty decent money. So you see how it created like this trend line liquidity. But it didn't work out to the degree that I wanted. Either way, I was able to make some money. So that was great. But yeah, that's how I looked at the market today. It was my first trade for the year. I'm very content with the results. So, but yeah, guys. So that's what I have for you. I hope that you were able to get something valuable out of this video, and I'll be continuing to drop more content this month. I'm going to try to do 1 or 2 live trades every week, and then some breakdowns. All right, so thank you for watching. Again, those that haven't subscribed, please do. I do have that free Telegram channel. I'm actually working on a Discord that I will be starting soon. It will be absolutely free, and I'll keep you guys posted on that. All right, have a good one.